Yo, 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 yo. Okay, okay. I wanted to see chat. So for some reason, it's not logging in. Yes, that's fine. Okay, it's currently 1:23, meaning that we have New York sessions opening very, very soon. So I'm going to quickly mark up the charts and then I will go on mute whilst we wait for entries. So let's get rid of all the drawers actually. So new drawers. So winner mark external liquidity. If you were, let's see if I can sign in quite easily. In the stream yesterday, we went over. Well, we didn't go where we kind of started to establish a document or two documents. We started one, which is our direction model. We will get to our entry model later on as we go throughout the weekend and the days and whatnot. I'll probably do that off stream, but we're going through this on stream because I started stream earlier. This is what our direction model has written up together so far. So more to update on it. But the most important bit will be the actionable steps, which will be the checklist which you can interact with, where you get to go step by step and look at the charts to then execute the direction model. And let me try to open chat on the new tab. Okay, so this is EU. So what we're doing right now is if you go to our direction model and look at the first step, it's the liquidity markup. Liquidity markup is where you literally mark liquidity with. And essentially mean by that is draw on your chart or something to represent liquidity. So we're going to start off with external liquidity. Remember, it's interactive, so you can check it when you're done. So we'll uncheck it for now. We need the weekly highs, daily highs, 4-hour highs, equal highs, and obviously the lows respectively as well. So we're going to start with the weekly time frame, and we're going to go over last week's. Let me get rid of this session so it's a little bit cleaner. We're going to go and mark last week's high, and we're going to mark last week's low. Okay, so let's use the template to mark that up. It's the weekly high, the weekly low. Okay. Then we have yesterday's high, which we were trading above already. So we swept this liquidity, mark the daily high here. And then we are yesterday's lows. They line up with the weekly low, so we're not going to bother draw that. The 4-hour swing high, it has some liquidity up here, which are also equal highs. So mark that as well. So we'll call this the swing highs of the 4-hour. I should say swing high actually. The swing high, daily high, weekly low. Okay. So that's external liquidity mark. Let's do a little bit of internal liquidity. Okay. So you have London highs, which is the liquidity pool. So look at that green. We have Tokyo highs. So we're basically determining whether or not this is going to be a reversal day or continuation. Over here, we have a liquidity sweep. Let me open the chat on my phone actually so I can see if there's Okay, so we've had a liquidity sweep of the Tokyo session lows and we've just had a continuation to the downside. New York Open is currently just moving upwards. So we can actually start by marking off, let's see, the New York session lows. So the laptop is very laggy. I do not need to copy it, but so good. So this is current lows right now. We have taken out this high here, this displacement here as well. So displacement of this. Okay. It's going to be turned into a BB, break a block. Okay, so going back to our direction model checklist, you can see that we've marked the external liquidity. So we can check that off. We marked the internal liquidity, which we've established what it is there. So now we're looking for a London liquidity sweep. Now the checklist isn't complete, so the rules on what each sweep means hasn't occurred or hasn't been written down, but we have seen a sweep of the Asian lows. So London session is taking the liquidity down here and has continued creating lower lows and lower highs. So New York session right now, we're going to be waiting for a couple of things. We see charts downtrending. We're going to be waiting to see if it accepts, first of all, above this breaker block or bearish fair value gap. Let me double check if there's news actually. I don't think there is for like Monday, Tuesday, Wednesday. So I think, yeah, I don't think there is. I remember checking last week. So we want to see if it's a reversal, if price wants to target these London highs over here. Because we've swept both the daily high and we've also swept the session highs as well, or session lows. So liquidity on its own isn't direction. Liquidity is just fuel for a move. Direction choice, let me change the color real quick because it's a bit swept. And then we can also, and on the Asian session have been swept, so it's not that. So we're not probably going to enter a trade for the next statement. So New York Open. So when the New York Open, which is now 1:30, we do not trade immediately because we're expecting manipulation. Now, when we can define a manipulation, then that means we can move on to the next one, which is actual confirmation of the direction. Where if it's the London highs, lows, we need acceptance and the nearest external liquidity. So these are kind of the types of things that we could be targeting, and that's what our TP is based off of. But for now, with this, we're expecting this to be a Judas swing. So we're going to wait for this. We're going to probably wait maybe about 30 minutes. From 2 to 3 is the key time. So what I'm going to do is I'm going to have my phone on me, potentially, because I'm doing something. And then I'm going to just leave this chart on. But I will be around. All right, peace. Okay, so just gonna come back, check in with everybody real quick. We are chill. Okay. Yeah, chat open. Right. So what do we see? So we've swept the lows of Tokyo session, the lows of London session, and we are currently had displacement to the upside, I believe. Yes, we had a displacement to the upside. So this bearish fair value gap became a inverse fair value gap because price has come above it and displaced above it. Now the only thing we need to do is to wait and see if price rejects it and has acceptance above it. We then also have we've taken two liquidity places. We've even taken this daily high as a liquidity. So the determining factor is whether or not we're going to be going towards the weekly low, which is down here, or if we're going to come back up to the swing high, and then of course above that is the weekly high. So our determining factor is if price is gonna go to this direction here or this direction here. So we're gonna find that out, and that's based off our direction model. Now we're not gonna add to our direction model yet, but we've now waited a decent amount of time for a potential Judas swing. The Judas swing is basically price going in the opposite direction that it actually wants to go in, just so it can trap some more traders to then get more fuel to move in the direction. But because we have the Tokyo session lows and the London session lows swept, and there's been a lot of displacement downwards, there is a strong case for this continuation, which is why you don't want to rush into this buy. So you want to wait to see if there's acceptance. So that's one of the things we put for step 4. You need to have acceptance in a certain way. Whether you have the acceptance by session, acceptance by a certain level, like the midpoint of the session, or if you have acceptance based on a in a certain dealing range, then you can then have an idea of where price is heading towards. So we've had this swing here. So you can almost this swing we've collected liquidity for London, but we've displaced backwards very quickly. And what's interesting is that we're back almost into the dealing range of London sessions. And there's a lot of liquidity sitting at the top of the London session, 2, the Asia session, and then of course in turn this swing high, meaning that it has also some external liquidity here. So there is a strong case for us to be trading to this swing high. The only thing that I don't like is that we have almost acceptance below the daily high, which could be that, okay, yes, we broke the daily high, but we're going to just come back down to create a swing low. So that is in itself, in a way, a bit of a concern. So this is the way it closed yesterday. This is the daily high of yesterday. Price trending upwards, broke that high, consolidated a little bit, retraced downwards over here. Now, so whether or not price will drop, continue this downtrend, or if it will react and reject and return to take those highs of that. So we're going to quickly scan the GU, and then I'll probably be gone again for like another 15 minutes to see what price does. After that 15 minutes, I should be good. I might do some recordings. It's 2 o'clock. I need to be out of here by 3. So I'm nearly done with what I'm done. It should be done in like 20, 30 minutes. Okay, cool. Let's see here. Okay. So yesterday stay with that range, okay? Okay. But now let's swap this. I think you can hear the washing machine, right? Oh, let me close the door, man. Dampen it a bit. Ow. Okay, so my initial kind of analysis of this is this. This is my initial kind of wow. I want to talk about something really quickly. So I want to quickly talk about accumulation versus delivery. Then I'll look at whether this market is accumulating or delivering. So price behavior and price purpose are not the same thing. What's the difference? Price behavior is what price is doing. Price purpose is why, and more specifically, where price is going. So where price is going and what price is doing are not the same things. If price is going to get to my take profit that I've just drawn over here, it can get there in a multitude of ways. That's purpose. Behavior is what is happening now, is how it gets there. So behavior is just more so focusing on what the market price action, as far as focusing on the market structure, it's focusing on trends, etc., and specific candlesticks. Price purpose is more direction, but let's break that down even more. If you think of the market like a trucking company, or there's big trucks that you see on the motorways, or maybe you've seen it. I'm pretty sure it's a global kind of. Let me see this just in case. I think I'm sure. Imagine it's a double decker. I hope it was lagging. Yikes. Okay, let's say you have a trucking company and you are delivering goods overseas, or just it could be even domestically, but you just have a big company. If you want to have the most profitable company possible, which means the most money you make, you want to fill up your truck and then send your truck out to then deliver the goods. Because imagine having that big truck and let's say you're shipping iPhones, and you put one iPhone box in a whole lorry. You're paying the person's wages, you're paying fuel, you're paying transport fees and times and costs and all these types of things. It's in one phone, and he's going to come back and pick up another phone. That's not an effective or efficient company. But a company where they have a truck and they're filling it with thousands of iPhones to then deliver it to the shop, that's a lot more effective than putting one in. What is the purpose of this? When you look at the markets, you're going to have, you're going to need liquidity to fuel the truck. Liquidity could be seen as petrol, or it could literally be seen as the boxes itself. But either which way, it is required to move the truck from point A to point B. Okay. So going through accumulation, which is another word, the same position building, it's how you build positions. Accumulation is where institutions are quietly building positions. What does that mean? They are, rather than entering big orders at once, they are slowly just bam putting in money over time. So there's characteristics to the market that you can see if this is happening. For example, price can look choppy. You can have overlapping candles, wicks both sides, equal highs, equal lows, false breakouts, repeated sweeps, range holds, all those types of things. So the purpose isn't to move price in this instance, it's to acquire inventory. They're literally just finding traders that are willing to take the opposite of their future trade. So they're basically trying to get as many traders in the market as possible to then fuel the eventual uh, reversal. So when you see the Asia range as an example, it's an example of that accumulation or order collection. When you see, I don't think that has it here. No. Yeah, time to enter. Might change the listing here. Template. I think this is absorption. I think price is going to come up. Wait, hold on. The Okay, this is my entry. So I'm probably gonna leave the chart open for a bit, and I'm gonna end stream. But we're pretty much done. I'll be honest. Like I know it's a short streak. What's it? 46 minutes. Um, yeah. I mean, this is our entry. We normally close our end stream when we enter the trade. I'm happy with this entry. We're holding this. So 1 to 3.4. Excuse me. And yeah, we just go again the next day. So yeah, I'm about to end this. I will keep you updated in my Telegram for reference, let me even. Bless me. Sorry, I couldn't find the mute button in time. Okay, so this is my Telegram. We just posted the idea here, and then we're gonna go through this on the way back home or something where I go through it and see if pricing stop losses or not. So yeah, I'm done for the day. Hopefully this is TP, set our levels, and then we just call it a day. It's pretty much simple as that. But I appreciate you guys for tuning in. For those that watch this back, shout out to you guys. I will be ending the stream. We'll be live tomorrow, very comfortably. Probably live for a little bit longer. We'll go through some like some things together. Like we'll probably finish off the delivery model and potentially start the entry model, and then we can go from there. But for now, I am going to end the stream, and I want to thank you guys once again for tuning in. Shout out to you people, and I will catch you guys tomorrow. Peace. It's been your boy CJ.